An orange flame flickers in the breeze, a symbol of the meteoric rise of Australia's LNG industry. BG Group, one of the UK's biggest oil and gas companies, has switched on its flare tower at its coal seam gas plant in Gladstone as it prepares to go into production. Two huge neighbouring plants operated by Australian companies, Santos and Origin Energy, will follow next year.
It's not a new thing to make coal seam gas, to produce coal seam gas, because we've been doing it for 20 years or so in Queensland. But what's really pioneering about the project is that we're taking that coal seam gas and we're making it into LNG and we're selling it into the market in Asia.
Liquefied natural gas, or LNG, is gas that is cooled to very low temperatures to shrink it in size, which makes it safer and cheaper to transport. Demand for the fuel is growing rapidly, particularly in energy-hungry countries such as China, Japan and South Korea, which are seeking cleaner forms of energy than coal and oil. Gladstone is at the centre of a global energy revolution that will fuel Asian economies for several decades and transform Australia into the world's biggest supplier of LNG gas. The three Gladstone plants are the first in the world to use coal seam gas, which is rich in methane, to transform into LNG for export.
We drill the holes, we frack the coal seam, we extract the water which keeps the gas in the coal seam, and then the gas comes out, we compress it and bring it through a great big pipeline, 42-inch pipeline up to our LNG plant, and then we liquefy LNG. We lovingly call the plant the Big Fridge.
7 new plants are under construction and almost a dozen are at planning phase amid a $200 billion LNG boom in Australia. But as the country prepares to overtake Qatar as the world's biggest LNG exporter by 2018, high costs, competition from US shale gas, and a proposed gas pipeline deal between China and Russia are threatening future investments.
The high cost of Australian LNG has been driven by a few factors, primarily higher raw material costs, steel in particular, and aluminium and all, because generally speaking these plants require high-grade materials, but also labour, and Australia is seen as a high labour cost market.
Costs have spiralled out of control in some projects, particularly Chevron's Gorgon facility, which is forecast to cost $54 billion compared to initial estimates of $37 billion.
We think it will be very difficult for new greenfield Australian projects to compete equally with those from the US, particularly as the buyers are now looking for lower LNG pricing, and that means that Australia can be competed out in that instance.
To reduce the risk of cost blowouts, operators often agree fixed prices with construction partners.
Now, there's no doubt in an environment like Australia, which has gone through a lot of growth, in the last couple of years, that managing those costs is something that's really, really important for us because it hits our bottom line, not the bottom line of our customers.
Bechtel is building 8 LNG plants in Australia, including the 3 facilities in Curtis Island in Gladstone.
So I think what you'll find is that the projects will get constructed here in Australia, and then within Australia the clients will probably draw a breath and then look at the global picture, because LNG is a global market, as to what their investment is going forward in the future.
The LNG industry is lobbying government to reform employment laws, streamline visa regulations and protect companies from the threat of industrial action. It warns a failure to do these things could see Australia lose its hard-won crown as the world's largest LNG provider by the mid-2020s. Jamie Smith, Financial Times, in Gladstone.